Hey everybody, Smart Silver Stacker here. Hope you're doing well. So, price of silver, as you can see, making a pretty significant move this morning. Up over 3% or just under 3% right now. It was a little over 3% a moment ago. But look, this move in silver that we're witnessing here, we're going to talk about what's driving it. But I do just want to say that, we've called this breakout in silver pretty accurately, and you can see from a technical standpoint what's going on in silver right now is incredibly bullish. We've had a breakout from a long consolidation pattern right here. We had silver run up to almost $30, came back down, pretty normal to retest the previous resistance in a breakout like this, especially one that happened as rapidly as the run up in silver up to around $30. Fell back down to what was resistance for a long time, this horizontal line right here, and now it's bouncing off of that line very, very strongly. So this is a very positive thing for silver from a technical standpoint, but let's talk about the fundamentals. So what's driving this resumption in the silver bull market breakout that we're witnessing? Well, it was some very weak data that we got today regarding U.S. jobless claims. So we got the weekly jobless claims, the highest since, I believe it was since August, the highest in more than 8 months. And here's the thing. The dynamic that we're witnessing is weak economic data is going to drive silver higher. Why is that? Well, it's because weak economic data indicates that the Federal Reserve is going to have to get out and print a lot of money regardless of how high inflation gets. And that's what we're on the precipice of. Massive money creation and massive bailouts from the Federal Reserve. So to give you an idea of just how weak things are, we got weekly jobless claims increasing by 22,000 to 231,000. Again, the highest since August of last year. The number of Americans, according to Reuters here, filing new claims for unemployment benefits rose last week to the highest level in more than 8 months. Also, this is coming on the tails of other weak jobs data. We had on Thursday the weekly claims report from the Labor Department, the most timely data on the economy's health, followed news last week that the economy added the fewest jobs in 6 months in April. And then in March, job openings had dropped to a 3-year low. And, think about this. This is with the data being massaged, being manipulated to put a very rosy spin on things. This is not data that represents the actual state. This is data that has been processed by the Bureau of Labor Statistics, by the government to make things look a lot better than they actually are. But nonetheless, things are getting so bad. The jobs that they are adding, part-time jobs, people getting multiple jobs, etc., they use a lot of that to try to obfuscate the weakness in the job market. But now, things are getting so bad that they can't do that any longer. If you want to get some physical silver in your hands before the price, breaks out beyond that $30 level, it's not financial advice, but I would be looking at something like junk silver. Silver's running up a lot today. This stuff is going to absolutely explode when people realize just how bad things are in the economy, in the financial sector, in the banking sector. So if you want to get some, head over to sdbullion.com. That's where I buy mine. There's a link down in the description. Okay, so today we've got the 10-year yield dropping on this news as well. Why is that? Well, it's in anticipation of the Federal Reserve driving rates lower through intervention, right? They know that weak economic data means that the tap of easy money is about to be opened once again. Now, let's take a look at this. This is another very alarming story, and this is probably one that we should be paying attention to even more than the jobless numbers that came out today. But this is one that I don't think has gotten much attention. So this is from Investopedia here from May 7th, so 2 days ago. But look at this. Americans downshifted their credit card debt in March. Now, why should that alarm us? Well, you're going to see this manifest itself in a lot of the other economic data very soon. So the nation's total revolving debt, mainly credit card debt, It grew by only $152 million in March. That is a dramatic slowdown from the $10.7 billion added in February. So think about that. In February, revolving debt, that is mostly credit cards, rose by $10.7 billion in February. But then last month, or rather in March, it only grew by $152 million. That's the smallest increase since April of 2021. That should be something that could be a huge cause of concern. Why? Well, it's because wages have not kept up with inflation, not with the real level of inflation. So what have consumers been relying on to make up the difference? Well, they've been racking up the highest levels of credit card debt in history. But that is starting to slow down. Why? Well, maybe it's because banks are getting a little more circumspect about who they loan to. Could also be that the Fed hiking rates has discouraged people. I mean, some of these credit cards, the interest rate is higher than 20%. So, people's cards are maxed out. They're running out of the ability to add more debt to the pile. So this is like a critical moment, an inflection point. When you see the credit card debt slow down like this, I mean, it's almost a negative number, $152 million. Maybe in April, the data will actually be that the credit card debt is shrinking. That's a huge problem. On multiple levels. One, it shows that the consumer is really tapped out, and the consumer is a huge component of U.S. GDP. I think it's something like 60% of U.S. GDP is driven by consumer spending. So if consumers can't borrow anymore and they're not earning more and they're losing jobs, that's a real negative recipe for the economy. Now, what does that mean? Well, if recession is imminent as a result of this, the Federal Reserve is going to do what they always do. What do? They print money. So it's really a very positive thing for the gold and silver price, but this is a very negative thing for the economy overall. It means more easy money is coming. Overall consumer debt, a measure that includes things like auto and student loans, rose by $6.3 billion. That's less than half the $14.8 billion economists had anticipated. So spending across the board, auto loans, student loans, credit card debt, all of this stuff is beginning to grow at a significantly slower rate, missing expectations of economists. So things are a lot worse than, economists realize, and then investors realize. And when they finally get a clue, well, what's going to happen to the price of the metals and really anything that is a physical, tangible good, because inflation is going to run out of control. I mean, the last time the Federal Reserve started printing, they started firing up the presses, we didn't have this inflation problem. But this time around, they're going to be printing into an already elevated level of inflation. It's going to go through the roof. I thought this was interesting. Let's play a little clip here for you. This is a clip of our illustrious leader in Washington during a CNN interview. I'm going to just play this for you because really it's kind of an amusing clip.
It's also true right now, Mr. President, that voters by a wide margin trust Trump more on the economy. They say that in polls. And part of the reason for that may be the numbers. And you're aware of many of these, of course. The cost of buying a home in the United States is double what it was when you look at your monthly costs from before the pandemic. Real income, when you account for inflation, is actually down since you took office. Economic growth last week far short of expectations. Consumer confidence, maybe no surprise, is near a 2-year low. With less than 6 months to go to Election Day, are you worried that you're running out of time to turn that around?
We've already turned it around. Look at the Michigan survey. For 65% of American people think they're in good shape economically. They think the nation's not in good shape, but they're personally in good shape. The polling data has been wrong all along.
It's also true.
Okay, so yeah, sorry to subject that to you, but we've already turned it around. Do me a favor, put a 2 in the chat if you think we haven't turned the economy around. I mean, it's so obvious, it's just so crazy the level of disconnect between the political elites and what is really occurring here. I mean, Bidenomics has been a disaster. Now, look, I'm not trying to get overly partisan. I mean, both parties are responsible for this, but certainly the current dementia patient in residence at the White House has a lot to do with what is going on here economically. I mean, certainly doing nothing to make it better, that's for sure. And honestly, I mean, think about this. Think about how bad things would be if the data wasn't massaged, if the data wasn't manipulated, right? if you actually had real inflation data being reported, if you had real jobs numbers being reported, if there weren't hedonic adjustments, if there weren't seasonal adjustments, it's pretty incredible, really, if you think about it. And, keep in mind, there is an election coming up, so it wouldn't surprise me. Now, of course, a lot can happen between now and then, sure, certainly. Plenty of things going on in the world. You could have a very disruptive event, but assuming we just head along on the path we are, it's very likely that we're going to see massive signs of the economy cracking before we get to the election. There may very well be some kind of an intervention from the Federal Reserve before then. This is the most recent inflation data. We're going to get the inflation data for April in a few days, but this is from March. But you've already got inflation beginning to creep back up, right? Even with the Fed just keeping rates where they are at. Yeah, someone in the chat there says he's not the one in charge. Well, that's true. That is true. That is 100% true, I believe. Jerome Powell probably has a lot more sway than Biden, and also that guy's just a puppet as well. We don't know the ones who are really calling the shots anymore in this system. This isn't a free market. This isn't a democracy, if you ask me. It's more like, I don't know, oligarchical socialism, if you remember that term from 1984. But yeah, someone does say the president doesn't control the economy. Well, that's true. Again, I will agree with that. However, there are policies in place which can make the economy a lot worse. Only the free market really can drag us out from this malaise that has dawned on the U.S. economy, but that's not going to happen anytime soon, I don't think. They're just going to keep trying to kick the can down the road. And that's why, even though inflation is still running, according to the official numbers, at around 3.5% annually, and Powell has basically told us that, that's okay for the time being. Eventually, he's going to get it to 2%, but he's more or less acknowledged in his recent talking points that, it might not be for a while that inflation gets back down to 2%. I wouldn't be surprised if at some point the Federal Reserve just announces that they've adjusted their inflation target above 2%. And, when that happens, that could very well be the kind of announcement that drives the precious metals, gold and silver, to new all-time highs. Gold is already right around record all-time highs. It's having a pretty good bounce today too. It's not just silver. We'll be blowing through those soon, but silver's going to be above $50. It's probably going to be in the triple digits by the time all of this plays out. At least that's, how I view things. And so I do view the current absolutely ridiculously low prices in the precious metals, especially silver, as a huge opportunity. I want to take a look at this too, because it's not just physical metals. Of course, we say if you don't hold it, you don't own it, and I get that. I like physical metals. I've got plenty of skin in the game when it goes to physical metals, but also some of the silver producers. Look at this chart of the junior silver miners ETF year to date, up 21%, putting in some pretty big gains today too. So, I don't have any affiliation with this ETF whatsoever. This is not like a paid endorsement. I'm just kind of sharing with you what I am doing, and I don't even own shares specifically in this ETF, although I do own shares in some of the miners that make up the ETF's holdings. But look, there's a huge opportunity here in these silver stocks, in physical silver. They're all still extremely cheap right now in light of what is about to hit the economy, and that is going to be massive injections of liquidity. The cracks are starting to show, but keep in mind, we also have, it's not just, jobs numbers that we have to worry about here. We have a insolvent banking system. We have an insolvent federal government. We're running $2 trillion deficits, $2+ trillion deficits annually now. The interest on the U.S. national debt is now above $1 trillion. It's likely headed to much, much higher levels unless the Fed intervenes, right, and unleashes massive inflation. So if you're the biggest debtor in the world, the U.S. federal government, remember that inflation really benefits you because the recipients, the beneficiaries of inflation are those with the most debt, because debt is destroyed by inflation. You can pay off your debt with devalued currency. So also, American consumers, voters, they're sitting on piles of consumer debt. They're going to actually have some of the pressure alleviated from that debt when the dollar is devalued. Of course, savers will be the real losers. we'll all lose because inflation, it has a lot of negative consequences on the economy, such as you can no longer afford to eat or drive your car because gas becomes so expensive. However, mark my words, when inflation runs out of control, there is going to be a campaign to convince you and I that this is in our own best interest, and I think that's why debt levels have been allowed to get to where they are, because they will use that as a talking point to say, hey, look, you own your house now because your mortgage has been eviscerated. Yeah, your little house that you bought for $200,000 is worth $2 million now. We're all rich, right? We're all millionaires. And that will be the song and dance when the inflation runs out of control. But don't believe it. Get prepared, get ahead of time, get into hard assets, because all those things are going to move up tremendously. And the move that we're seeing in silver today, you zoom it in here, you can see bouncing right off of this level, putting in very nice gains today. I think we're going to be taking out $30 very soon. And those who are holding physical assets will be not the winners here. There aren't going to be any winners in a hyperinflationary collapse of the economy. But they'll be the ones who are most insulated, at least, from the worst of the consequences. So do me a favor, smash the like button on this video, share it on social media. If you haven't subscribed to the channel yet, make sure you do that, and leave me a comment down below to let me know what you think about all this. Are the jobs numbers going to continue to get worse? How will the Federal Reserve react? Are they going to say inflation be damned, or are they going to keep up the inflation fight? Love to know what all of you have to say, so let me know in the comments down below, and I will catch you next time. Stay